everyone wants to hear. Like, just buy. This is going through the roof. Just buy, 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 buy.
My mic's not on. Dun, 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 dun.
Yeah. Okay, we're live.
We've been live, bro.
Paul, how are you?
Fabulous. Can you put my mic on?
It's on, baby.
Oh, is it?
Welcome, everyone, to the Everything Money live stream with your Uncle Seth.
Your Aunt Paul.
And your Grandpa Paul. You look good now. You look gray coming in, Paul.
Do I?
Well, you said you're getting a little gray on the sides.
I have getting a lot of gray. Oh, I did said, okay, I thought you said something else.
I want to thank all of our live stream viewers at the moment. And we especially want to thank all of our new subscribers. Guys, our channel's been going off the chain, at least in our eyes, Paul.
Yeah.
It took us almost, 18 months to get upwards of like 200, 300, 400 subscribers. And in the past 30 days, almost 500 of you have jumped on to follow Paul and I. And it's been incredible for us. And it's really invigorated our mindset about bringing you more great content so you can learn from your Uncle Paul. So, Paul, for our new subscribers, real quick, just before we get into things, why don't you tell them who you are and why you're doing this? Oh, I froze him.
Yeah, that was not expected.
I brought that up, Paul, because, there are YouTube channels where there's experts.
Well, Seth sent me one last night, and you were like up in arms about this guy. We won't say who it is. But right. I watched it and like, so the guy was full of shit. He was just talking about how you're going to make money buying Tesla stock. And that's all he does. He's like, yes. And then he said something like, but more importantly, we're going to become better people. I'm like, what the? Did you hear that part? I'm like, what does this do with buying Tesla stock?
I did.
You know, I've always liked teaching. I've taught for the last 8 years at Walsh. I was a teacher like an investing class at my old at our whole high school where Seth and I met. And I've always enjoyed it. And we decided to do this. It's a lot of fun, and we're on our way to 1 million subscribers.
How do you, for people listening, like, how are you an expert? Describe your past, what you've been into.
So I started investing when I was in high school with you, and that doesn't make me an expert necessarily, but it has lots of years of changing and reading and realizing, okay, this doesn't make sense to me. This does make sense to me. You know, when I interact with the people on the people comment a lot in our videos, right? And I'm very good about responding. In fact, somebody last night was, well, you weren't joking about it. You respond to everything. I'm like, yeah, I try to respond as much as I can. I don't think I've missed any comments so far. But when I've been doing it for so many years, you get a certain philosophy. And I advised somebody last night, just read as much as you can, not because you're not gonna stick with everything. You're gonna things that make sense to you are gonna pop out. And you have to focus on those things. And that's what's basically worked for us.
Great, Paul. Today we want to talk about a few things.
I think tells me you didn't really pay attention to that.
I didn't. I love you though. We want to get into this stock. Why did you want to pick AMD for today's stock analysis?
Somebody requested it. One of our viewers requested it in a comment. Who was it? Do you remember, Don? It is. Oh, was it? Yeah.
Go ahead, Paul. Tell me about the company. What the hell is it? I don't know anything about it.
So AMD is Intel's probably their biggest competitor. Although Samsung makes a lot of chips, don't they? Oh, only for mobile? Thank God we have Seth and Don around to help us out with that. Yes. But AMD is Intel's biggest competitor probably in the US. I believe like Dell uses a lot of AMD chips. I don't know. The whole point is they're a big chip maker. It was a request not only a week ago, but even last night, somebody commented on YouTube and asked for AMD and Intel to be analyzed. Intel, spoiler alert, is pretty close to my take price. So we'll look at that one in a little bit. But in the meantime, let's look at AMD. So Seth, we have our 8 pillars, right?
Oh, we're doing 8 pillars just now. Wow, great. Yeah, I agree. So the stock price is 75. Sounds great.
Don't care, right?
Yeah. Don't really care.
What's the company worth?
Right. Oh, I see what you're saying. Yeah. What is the market cap?
This is the price for the company. Market cap versus stock price. Market cap is what the company is worth. It's all the shares multiplied by the stock price. This could easily be $35 and that'd still be 89. Just depends how many shares are outstanding. So I always look at the company's price to determine what the price that I care about is.
Okay.
I couldn't care less about the stock price.
Now they're on the first page here. What about PE? Okay. We're changing our pillars. If you watch in the past, we're changing the pillars around because they're on different pages of the financials. So PE is, I think, one of the sexiest ones. And we want this under 20. Paul, what is it?
142.
Uh-oh. What does that number mean to a normal viewer person out
Okay.
there? What does that number, that high
So
number
a
mean?
lot of people would sit there and say, I'm not looking anymore. This is alarming. 142 times earnings. That PE is the price of the company divided by the earnings of the company, the profit.
Mm-hmm.
Okay, that's 142 times. That means for every dollar of earnings, you're going to pay $142 for it. That sounds alarming.
Yes.
Now, let me make sure everybody understands this. This isn't necessarily a deal breaker for me. When I see this in a company, I don't go, delete. I look at it and say, okay, they might have had a big write-off that really dropped their price a lot, dropped their earnings a lot, and made this PE really high. I have no idea. This in and of itself is not enough information.
Okay,
right? So I want everybody to understand, even though it's the most common thing to look at, it's obvious. It's also one of the most misunderstood metrics in a company.
So in comparison, we just did a podcast on Verizon. Their PE is around 13.
Yep.
Tesla's is over 1,200.
Is it even that? Does it even have a PE?
I guess right, because of earnings.
Yeah. So either way, I'm not like necessarily, this is still alarming, but you want to just like if a PE was very low, but they had one-time gain, I don't want to look at that. So that's the first step.
Okay. Pillar number 2 is profit margin. We want to make sure we have good profits, Paul.
Okay. Their total bottom line profit in the last quarter was 8%. Not great. We want over 10%, but their gross margin is not bad. It's 44%. Their gross margin being for every extra unit they sell, how much of that unit's revenue is profit, and it's 44%. So the more and more they grow their revenue, the higher and higher their total profit will be, because they're adding 44 cents for every dollar they add in revenue, if that makes sense.
Okay.
We have two right now. We have two X's right now, right?
Two bads.
Yes, but again, we don't look at all the 8 pillars saying that they have all 8. It's a combination of looking at multiple things.
Okay. How about pillar number 3 is revenue growth over the past 5 years?
Okay, so revenue growth. We're going to go to the financial statement. And again, everybody, this is Y charts. I pay for this.
How much is this a month?
$200 a month. No, $300 a month.
That's a lot. It's not like a Netflix, but
it is. But I need it because I go in this stuff all the time. I go through it. For you guys, go to Google Finance, Yahoo. They'll have a lot of these things anyhow.
Okay, great, Paul.
So revenue growth. I'm going to go through last year. Okay. 4 billion, 4.3, 5.3, 6.5, 6.7.
You have to like that.
Yeah, it's pretty good.
Speaking of likes, go ahead and smash that like button if you're watching at home. Please, pretty please, with sugar on top on your phone, on your laptop, on your computer. Bottom right
Everybody
corner.
in our chat, please hit the like button.
Thanks for the support, guys. We really love you. Keep going, Paul.
So
you gotta like that revenue
here.
growth. Yeah, you gotta like that.
I will make comment. I always still like to look at the 5 years before that. 6.5, 6.5, 5.4, 5.3, 5.5. They dropped to 4.
Oh, so somewhat static over the past decade.
Yeah, because they had a big fall. I think, and Don probably better at answering this one from the technology side. I think they were losing a lot of market share, and they did this. What was the name of that chip? The Ryzen chip, and that probably helped them out a lot. So
say it again, Don. You got a mic over there, right, Don? I do, sir. Oh, there you go. He sounds good. Okay.
So the revenue is coming back up again. So that's a good thing.
How about profit growth? Pillar number 4.
Okay, so for profit, we go to their net income section.
Mm-hmm.
They lost 660. They lost 500. They lost 33. They made 337. They made 341. So their losses are decreasing and then going up, and then profits going up. So that's a good thing. Boy, look at this stretch right here. They lost a lot of money in this stretch right here. Whoo, boy.
Billions and billions.
Yeah, I mean, so there was a struggling period here, but it seems like they're on the up and up right now.
Okay. How about shares outstanding? This one's important to you. Pillar number 5, shares outstanding. How many shares are out there?
Shares outstanding. 10 years ago, 711, 730, 740, 750, 770, 780, 835, 950, 982, a billion.
It's a lot, Paul.
Yeah, it's gone up a lot. It's gone up over 50% in the last 10 years.
So
that's very similar to Verizon, by the way. But when we looked at the information on Verizon, we realized they made a big acquisition of Vodafone.
What does that mean to normal people like myself watching this video? When they increase shares, what does that mean for you?
So if you remember on Verizon, they had very stable shares, 1 year of a big jump, and then stable again, right?
Mm-hmm.
Here, it's consistently over and over. This is a sign. You want to understand why is the more shares the company issues, the less your shares are worth. So think about it this way. Let's say a company has 10 shares outstanding. You own one of them. Right now, you own 10% of the business, correct? 1 out of 10 shares.
Yes.
Let's say all of a sudden they increase the number of shares to 20. It's different than a stock split. Is that they're just increasing the number of shares. They might do that for a couple of reasons: to make an acquisition, to pay employees, etc. All of a sudden, now you went from 1 out of 10 shares to 1 out of 20 shares. What percentage of the company do you own?
Half.
No, 5%.
Oh,
right? You went from 10% to 5%, so you lost half. but it's the same, but you still own that one share, but now you only own 5% of the company versus
I meant
10%.
half the value. You have half
Correct.
the value.
So here, if you owned 1 million shares, if you own, let's call it 7 million shares, you own 1% of the company. Now you own 7 million shares of 1.1 billion shares, which means you own 0.7% of the company. So you've been diluted, as it's called. That's not a good thing. You understand what these shares are going for, but when I see it consistently say like this, it kind of makes me get concerned, especially with their financials being so bad. They're probably trying to finance a lot of their losses.
What about assets? Total current assets greater than total current liabilities. In a perfect world, we want that.
So we go to the balance sheet. We go to the balance sheet, and I'm actually going to go to the most recent quarter because it's all about what's recently going on. So they have plenty of money. Total current assets is basically the money they have on hand. And they have plenty to pay their current liabilities, which is the bills they have that are due in the next year. So this is a good thing. They have over double the amount they need. So liquidity-wise, they're probably okay.
Vin says pillar number 9 is make sure you wear them short shorts during the live stream. You do like the shorty shorts, and you got a little moose knuckle cooking there. Okay, pillar number 7. And Matt Jensen's asking, what is the tallest pillar, Paul? Hopefully, pillar number 7 is
free.
You know
what that's from?
No.
That's the joke from the video. Which would you say is the tallest piece?
Oh my God. We were watching Howard Stern prank calls just before this. What about free cash flow?
Matt, can you share that video in the group chat, please?
Growth. Free cash flow, which is cash from operations, Paul, minus capital expenditures, whatever all that means.
Seth.
Yes. I've now memorized what this is.
All right. So the last full year, we go to the cash flow statement. Again, this is something that most people don't do. Cash from operations less the capital expenditures. So last 5 years, they lost 330.
330 what, mil?
Yeah, million. Gained 4. Lost 100.
Oh boy.
Lost 130. And then gained 280.
What do you take of this?
It's very inconsistent. Now they were coming out of a shit show here. So they're probably investing back in their business, spending a lot of money in operations. Revenue is going down. So I don't know. This is not over the last 5 years, they've lost cash flow. That's not a good thing, right? Again, this could be the up and up. This is a big jump this year. So you want to sit there and figure out like, what is this is this now a permanent thing? From what I'm seeing about AMD right now, you want to understand where's the future of the business? Are they past the bad times? Are they really going to be able to gain market share on Intel? That's the whole story here, especially for 140 times profit. If you remember, we saw the profit, by the way, and on the previous statement, we said it was 140 times. It didn't look like that profit wasn't like there was a big write-off that year. So I'm a little concerned about the valuation. I can already tell you right now, too expensive for me. Already. Even though because remember the PE ratio was 140?
Yeah.
And when we looked at the profit for the year, we didn't see, let's go to the last 12 months then. Let's go to the trailing 12 months. So this will tell you the last 12 months of profit instead of the previous full year. The last month of profit, 12 months of profit was 609 million. That's pretty good, by the way. But to be selling for, this is an $89 billion company that in the last 12 months has made 600 million bucks.
It's not a lot.
That's not a lot. That's hard. That's a very tough thing to swallow. So I'm looking at going, I just think AMD is too expensive, but let's finish the pillars.
Pillar number 8 is price to free cash flow less than 15.
Okay. That's 100% not going to be the case. They had 200 million and the company's worth 88 billion. So remember the company worth 88 billion, and they made 200 million in free cash flow. That is 440. That's the price of free cash flow, 440. We want it to be under 15.
15.
Yeah, we got problems.
So at what point, Paul, do you ever care about the price of the stock?
That is the price, 88 billion.
No. I'm sorry. Going back to the ticker symbol.
Never.
Explain that, because I'm still confused. I've been here for 2 years.
This price of the stock is just a representation of the value of the company, which is the true price of the company, divided by the number of shares they have outstanding.
Okay.
So this is what matters to me. 88.9 billion is the current market cap. If you wanted to buy the company in full right now on the market, this is what it would cost you, $89 billion.
Okay.
I don't care if they have 89 billion shares outstanding and it's $1 a share, or they have one share outstanding, it's $89 billion that share. That's what that's going to represent. It's just whatever number of shares they have outstanding. This is what matters.
Okay.
Overall, I look at the market cap. That is the price of the company.
So go to the 3-month or 6-month price chart here. What is this? What is all this? Why are they in the news?
Something's happening. It's Don. Maybe you can help us out. What's the reason why they're in the news so much lately?
So I know that they've done exclusive deals with Apple. They have their boards, they have their chipsets inside of a lot of the new Apple computers, the MacBook, not the MacBook Pros, but the Mac Pros that were just released that look like a cheese grater. Those big Mac Pro machines.
I have no idea what that is.
They're new to you guys because you're not in this space.
Get in that mic, Don.
As far as anything that's big for them, PC gamers are getting into their space because they rely on AMD to be a little bit better.
Oh, okay.
So PC gamers are adopting them a lot more than Intel chips.
Like Alienware?
A lot of major manufacturers are picking them up.
Because Alienware is owned by Dell, and I thought Dell was using a lot of AMD stuff too.
So every manufacturer uses AMD. They kind of do a split. They do some machines that have AMD.
Okay, yeah, we have some.
This.
Got it, guys. We have some viewers saying, Thirsty Program says most PC games are using the chips, CPUs now. Vinny says it's a new chipset released before Intel. So this is this.
That's good. That's good response. But now I'm looking at this thing. It's just way too expensive, guys. Like I look at this going like, what's Intel? So let's go to Intel and see. Let's compare it to Intel.
Okay.
So AMD is selling for $89 billion, and they do $6 billion in revenue. Intel is selling for $210 billion, so 2.5 times more, right?
Now look right off the look. Paul.
Don't worry about that.
I know, but like the idiot in me looks at that chart and says that this stock
sucks.
No, it looks like it's on sale. Go back.
Right, I got you what you're saying. Okay.
Right?
By the way, it is on sale, but don't look at the. So guys, remember one thing.
I'm the dummy that just looks at this graph and says this is a buy.
Just because the stock goes down in price doesn't mean it's on sale. Sale price is price versus value.
So listen, I brought this up in the last episode because if you watched us on YouTube, Paul, you're rather disciplined in looking at all this stuff, and you taken like you're very calculated, no pun intended, on all this stuff. And so I said in the last podcast, like, you're never buying a stock that's trendy and high. What, Paul?
I got it.
Go.
I'm going to give you the analogy.
Go ahead.
This is the one analogy I always give.
Okay.
You know what a Ferrari Enzo is?
No, I'm assuming it's fast and looks nice.
It's their amazing, huge, awesome car. It sells right now for around $2 million. Is that a good deal or a bad deal?
I see. I don't know. Sounds like a lot of money.
Right. Now let me ask you a question. If I called you tomorrow and said, Seth, I've got an Enzo. I need $500,000 tomorrow. I will sell it to you for $500,000. Is that a good deal or a bad deal?
In comparison to the sticker price, great deal.
Okay. If I said to you, hey, Seth, I want $3 million. Is it a good deal or a bad deal?
Again, bad.
Okay. That's all I'm doing.
Okay.
This is the value. Price is what you get. Price is what you pay. Value is what you get. Right?
Okay.
So when you see the chart go like this, all it is displaying where the price is. The value is not going to change as much. Value is about what's behind the company. What's the revenue growth? What's the profit growth? What's the balance sheet look like?
Okay.
Those are less likely to, those aren't going to change as fast.
So the dumb person that I am sees the graph just completely tanking for Intel.
Okay. So let me go to the next step.
And then I say, well, okay, this is either two things. The company's going down the drain. I shouldn't invest.
Okay. So let me ask you this next
question. Or the price
question.
is on sale. I should.
I offer you, I said to you, I want $4 million for that car. What are you saying to me?
No.
Okay, great. How about 2.5?
No, I could still buy it new for 2.
Great. But the price just dropped a lot.
Oh.
You follow what I'm saying?
Kind of.
You were worried about looking at the graph and saying, Paul, but look at the graph. It looks on sale. The price went like that.
Yes.
Well, so did it here.
Oh, I see what
Why
you're
didn't you
saying.
buy it?
So we're here to determine if this new price
Our
is
goal
viable.
is always to sit there and say, we're going to think to ourselves, this is value. This
is the
is
market.
Price.
Yeah, Mr. Market changes his mind every day.
Yep, Mr. Market changes his mind every single day. You have to decide, are you a buyer or a seller? This price dropped almost 40%, but you still weren't a buyer. Why?
That's right.
Because the value was $2 million and it was still 2.5.
I got it overvalued still.
If it was always this way, you know what to do? Hey, my house is for sale. It's $10 million. Too high. Fine. How about $5 million? Well, it's still too high. But if you
price.
if you base it on this, it's half price. It looks like it's on sale.
Mm-hmm.
So my goal for Everything Money is to teach people to sit there and say, I'm not going to just look at the price. I'm going to look at the value behind it. If I gave you my wallet and it had $300 in it and said, buy it from me for $100, you'd buy it all day. Buy it from me for $1,000, you're going to ignore me. Put it on sale for $500. It's still more money than it should be. What are we hearing out there?
Leon's asking, what's AMD's forward PE?
I don't ever. You said Leon?
Yeah.
Leon, great question. I never look at forward numbers, and here's why. Go look at the history of people's projections for the future. They're always massively off. My goal as a value investor is to buy a company at a discount to what I perceive the value to be today. If they do above and beyond better, awesome. But I'm not going to pay for the future. I'm more of the investor of saying, let's look at the past and let's determine what a value would be based on them just moving along, and I make my own assumptions.
I think Vinny's saying the same things. He says AMD is priced for the next 2-3 years already. Not much room for growth.
Correct. And by the way, I think it's priced for the next 10 years. I mean, look at it. Look at it this way. When we looked at Intel, did you see the Intel numbers? We've moved away from Intel.
Yeah, go back to
Well, let me instead of pulling it up, let me just tell you. So
okay.
AMD.
Guys, you're doing great. Our live streamers out there watching, we appreciate you watching. Thanks to our new subscribers, and thanks for smashing that like button right now. We love it. Great job,
revenue
guys. Appreciate
and
it.
Profit.
Keep going, Paul.
AMD's revenue was $6 billion. Intel's revenue was $80 billion. Okay. Actually, now you do have to pull it up. Please tell me you stayed on there. Oh, they're gonna make me re-sign in.
Now your password and your locker combination are the same.
Do you remember your locker combination?
Oh my God, of course not.
I don't remember my locker number.
We do remember all the OGs out there who are commenting and liking our videos. We've had some people follow us for the last 2 years when we had very few subscribers and watches. Paul, I think we have more people watching right now than we were getting in our first few videos. And it's really a testament of us just really keep getting after this and keep going. It's good stuff.
Yes.
Go ahead, Paul.
In the last year, Intel has made $24 billion. $24 billion. $24 billion. How do I minimize this to get back to this screen?
Don boy.
Let's just go like this.
Wow.
Oh, wait. Whoops.
Paul, look at that.
What the heck, Don? How do I do this?
Not liking.
What am I doing here, Don? Oh, okay. So Intel made $24 billion. Intel made $24 billion. AMD made $600 million. Do you guys see the difference here? But yet Intel is market cap. AMD was 89 billion. Intel was 210. So Intel has 13 times more revenue. It has 40 times more profit, and it's only selling for 3 times more, 2.5 times more. Do you see?
Yeah.
So for somebody sitting there saying, like, when Leon says it's priced the next 2 or 3 years, how long will it take AMD to even equate Intel?
Gosh.
To make up for this difference. I mean, it's insane. I think they're factoring in 10 more years of major growth.
Mm-hmm.
Is it possible? Of course.
Yes.
Is it probable? As an investor, your job isn't to sit there and figure out what's possible. It's to figure out what's probable. If I flip the coin 1,000 times, how many times is it going to land on heads? How many times is it going to land on tails?
50-50.
About there.
Mm-hmm.
Is it possible it lands on heads 800 times?
Yeah.
Is it probable?
Of course not.
So if I made a bet with you on it has to hit 800 times on heads, would you take that bet?
And you've said this before. Instead of hitting up the flashy stocks like Tesla, you'd rather just play it safe and play the long game.
Intel looks like a much better buy for the dollars than AMD. Intel's the leader in the market. Does that mean AMD won't someday overtake Intel and be worth $500 billion? No, of course not. But I look at it going, that's quite the leap for what I'm buying here. If I were to buy one of these companies in full, I'd rather have 1/3 of Intel than all of AMD.
Yeah.
Because 1/3 of Intel, if I paid $80 billion, $70 billion for 1/3 of Intel, every year I'm going to get $8 billion of my money back. That's pretty good.
Yeah.
So Intel, by the way, it's funny you mentioned this. Mo, our good friend Mo, asked me about Intel today, and it's pretty much at my price mark right now. Under 50, we're talking about buying some Intel soon.
Do you want to look it up?
Let's
Look
look
up
it up.
financials?
Let's look it up.
Great.
Now, again, people, I'm not telling you to go buy Intel, please, because you're going to get mad at me when it goes down, and I'm going to say, I don't care, because the whole point about all these things I talk about is you have to have a portfolio of stocks. And I expect to be right on less than half of the stocks that I buy. But when I'm right, I'm going to be right really well, really high. And when I'm wrong, who knows what's going to happen? I'm hopefully not going to be wrong that bad. So don't go out there buying companies because I said something.
Angelos is saying thanks for the Intel insight here. They've been asking about it for a while. And we welcome Ramon Perez. He said YouTube recommended this to him. And he said, good. It's good. YouTube recommended us to him, and he found us.
I asked Ramon. I think he messaged. I asked him how he found us.
Cool. All right, Intel.
You going to hang out with Ramon?
Ramon.
You know what that's from?
No.
Seinfeld.
Oh, my gosh. Should we start?
Start what?
Looking at this.
We're doing it right now. Intel.
PE, less than 20.
It's 9.
Wow. Gotta love that.
PE Intel right now is 9.
Gotta love that.
It's very reassuring. Again, in and of itself, it's not going to tell me as much as I want to, but I like seeing like, okay.
Where's it? Make circle it on the chart so people can see where you're at.
So right here, folks, PE ratio, 9.127.
Nice.
Market cap, 210 billion. Next question.
Pillar number 2 is profit margin.
26%.
Wow.
What was AMD's?
AMD was 8.
Correct. It was 8%. Which would you rather have?
That looks great.
It's way better. 26%.
This is Intel?
This is Intel.
This is looking good already. What about revenue growth? Revenue growth of the last 5 years?
My guess is not very good. Why is that?
I don't know
such
much
a
about
big
computers
company.
and CPUs. Okay.
They've been dominant in the industry for what, 30 years now? I mean, how long have they been the number one player in the industry?
Mm-hmm.
I mean, since we were wee lads. So we're going to go to the annual numbers on Intel's revenue. Oh, not bad. Look at this. 55, 59, 63, 71, 72. Not terrible. I wonder if there's some acquisitions in here, but it's looking pretty good.
Okay. What about profit growth over the last 5 years?
11.4, 10.3, 9.6, 21, 21.
You like E?
I like E.
Nice.
I like E.
Wow. How about shares outstanding, Paul?
Okay,
Pillar number
so this
5,
is the
shares
big thing.
outstanding.
Remember, AMD went from 700 million shares to 1 billion. So let's see what Intel did to their investors.
Okay. Go ahead, Paul. Dun, dun, dun.
5.6 all the way down to 4.4.
What does that mean when the company's buying back shares, Paul? Tell me what that
They
means.
are doing a good thing. Not all the time, but I like this because what they're doing here is they're taking their excess cash flow and removing shares from the market. So remember with AMD before, when they're increasing the number of shares, you still have the same number of shares, but now there's more shares outstanding, so you're owning less of the company. Here, it's the exact opposite. You own 10, there's 10 shares of a company, you own 1. You own 10% of the company. If all of a sudden they take it down to 8 shares, you still own the 1 share, but now it's of 8. You own 12.5% of the company. So doing nothing, you went from 10% ownership to 12.5%. That's a lot better. Here, the same thing happened. They decreased their shares by 20%. So they went literally from 10 shares down to 8. This is good. Now, not buying shares all the time isn't necessarily a good idea, but when the shares are low valued, it's a good idea. I like what's going on here.
What about pillar number 6? Current total. Did you hear me? Current total.
Turtle Coral, I like that.
Current total assets greater than liabilities.
Okay, total current assets, 44 billion. Total current liabilities, 22 billion. They have twice as much money.
We have not hit a company that's hit this many pillars.
We're 4 for 4 right now.
Paul, I'm on pillar number 7.
What?
Yes, listen, we've free cash flow growth.
Free cash flow.
Cash from operations minus capital expenditures.
And the great thing about free cash flow is it's what the company can use to go buy back shares, pay dividend, invest more in the business.
Wow. My son Gio's going to love this stock. It sounds cool too. Go on.
8, 12, 11, 14, 17.
Wow. Yeah. Last one. Price to free cash flow.
The price was 210 billion. Free cash flow was 17. What is that ratio? 10 for 12 and a half?
We won at less than 15.
What is that, 12 and a half? Did I do the math right? I don't think I did the math right. Yeah, I did.
Yeah.
Is that right? 210 divided by 17.
12.35.
Damn it. Just
So
kidding. I said
okay.
12.5.
So this is all.
Suck it.
This is. So now, when do we look?
When was the last time we had all 8
All it
pillars?
never.
in?
This has never happened on the podcast. So tell me this, Paul. Now that I've learned from you for many years now, it actually doesn't matter what the stock price is right now.
Does not matter.
Right?
If now the hard part is when you buy it, it's at $50 a share now. What is it right now? 50? Intel? 50. 50, 49 and a half.
Mm-hmm.
The hard part will be if it goes to 40, what are you going to do?
Shit my pants in fear and
that's
sell.
what most people do. And I
Uh-huh.
would be buying more.
Oh wow.
Yeah. So what I'm going to do right now is I'm going to go out there and I'm going to figure out a way to, I'm going to go buy some shares right now. And then I'm going to do a strategy called selling puts, which is to generate income at lower prices. So if the price keeps dropping, I keep picking up more shares. I do like this company. I think I'm going to pick up some shares today, but that doesn't mean you should go out there and do that, everyone. I have businesses, real estate, day trading, puts. I have so many streams of income. I can be wrong. And I'm not going to spend a lot of money on Intel. I'm not going to go put a big chunk of my portfolio in there. I'm maybe going to put 1 or 2% in at most. Talk to me.
Leon asks, are you going long on what's hashtag KO? And why do we have Coke?
Coca-Cola.
Oh my God. Yeah, because we have Coke in every one of our videos. There's just always Coke cans around the.
Coke Zero brought to you by.
We're not brought to you by Coke Zero. Are you going along on Coke? Is Coke going away?
Coke's probably not going away, but it could be selling for too much. I have no idea.
You wanted to talk about Roku today.
We did want to talk about Roku. What's the deal with Roku, Uncle Don?
Don, what's your interest in this?
So they
just
signed
got
a deal with NBC.
Oh.
They signed a deal with NBC to have Peacock stream on their service. So
well, they don't make money, so that's a good start.
I was gonna say, Paul, if they're in the news, you're probably not buying, right?
They have not made money in their existence.
What?
In a full year.
Use your pen.
In a full year, folks, they went public. In a full year of all financial data, they have not made $1 yet.
Where are we have the Tesla fanboys? Where are the Roku fanboys?
Yeah, they're not here yet, but they will be here.
Uh-huh.
So they did $1 billion in revenue, and they're selling for $24 billion. That's 24 times revenue. Oops. 24 times revenue.
What's their PE?
Negative. It doesn't exist. It doesn't exist. They have negative earnings. You can't have a negative in the bottom. Yeah, I'm going to go ahead and say no. Listen, I just automatically would say no. I'm not going to buy it.
Buy.
Because $24 billion, I look at this saying, I can find other companies around $20 billion that I could get with more profit, more revenue, all that stuff. I'm not a speculator like that. What are you reading?
That's just people like my beard.
It's a very sexy beard.
I call it powerful. It's a very powerful beard. Because I lack any other power, but I know like if
you have a lot of power.
Like if I meet someone like a machismo guy,
yeah,
like inside I'm probably like scared. Maybe he knows jiu-jitsu or something. But on the outside, this powerful beard will hide my
jiu-jitsu.
You ever done it?
No.
Would you? Oh, by the way, Paul, and for our viewers, if you haven't smashed that like button, we recently hit 1,000 subscribers over the weekend.
And hit the bell too, so you get notified.
When we hit 10,000, Paul and I are wrestling.
This has never been discussed.
Oh, Don knows this. Go back in the footage, Paul. At 10,000.
Is that what I said?
What's
his name on?
Oh, I can't remember.
Yeah, Zion Clark.
Zion. Oh, yeah. Did I say that?
We're going to wrestle. So my wife said, are we getting sized up for our Everything Money singlets, Paul?
We got to do that.
Now, I said, when we wrestle, we have to like rent a mat. We have to go to the gym. We have to get a referee. We have to rent a referee.
I've never wrestled in my life.
Paul.
Why do you say it like
check
that? I have no idea.
The footage. This is happening.
I've never wrestled in my life. I'll wrestle you, but I'm just telling you, like, when you say a ref, like, what the hell?
Now, the options I thought is, what if I strapped like my strong hand down, like, or no hands at all? Could I wrestle you with
beat me.
No hands?
You'd still beat me.
So
you just lay on me.
So we're gonna try and attend. We might get suited up for our Everything Money wrestling singlets, and I'm assuming I don't look good in like yoga spandex, Paul. I mean, you are looking very sexy of late, but
svelte.
Okay. Let's do. So you're saying, our analysis of Roku lasted about 2 sentences. It's a no.
It's a no. It's already selling for too much money, too much everything. It's taking too many things into consideration for go. By the way, could it go up to 1,000? Absolutely. I'm just telling you, I don't feel comfortable with it.
And our stock expert Mo has confirmed the wrestling was stated by you, so we'll keep that to you.
Mo just texted me. I said we're live. I'm watching. That's what gave me the idea.
All right, let's get to it. We wanted to talk about your thoughts on airlines. You've been in love, no pun intended, with Southwest for a while. Some people are asking about it, and another person's asking about Neo stock. So we'll make a note of that. Don, can you make a note on Neo? Someone wants to ask about that. But go ahead, Paul. Let's talk about airlines just in general. For example, we had bought. I just made up a word.
Yeah.
What about the jets? What about?
Yeah, jets. So guys, this is a good point that Seth brings up. If you feel, it is something we do. Like Mo and I do the same thing. If you feel good about an industry but don't know which stock to play in it, buy the ETF. Like Jets is looking at Jets going like, listen, do you think the airline industry as a whole is going away? What's the answer to that?
You've said that to me multiple times. Of course,
no, I don't think it is. Same with Carnival. Same with the cruise lines. Now, if you don't feel comfortable making a specific bet on a specific company, by all means, look at the ETF. These are good strategies to play. Like, okay, what industry has been beaten down quickly?
Yeah.
Airlines, cruises, travel, etc.
Yes.
Maybe the good idea is instead of picking individual companies, you go buy the ETF saying, hey, I mean, if you look at the Jets ETF,
I'm looking at it.
It's been hit hard.
Yeah, so it has. It was upwards most of the year earlier. It was around 30. We can pull it up.
Right
there
here.
you go. Pull it up.
Look at this.
Yes.
It started in 2015, and it was pretty much at 30, and then collapse city. I mean, I look at this saying, okay, if you want to make a play on an industry, this is how you do it. You buy the ETF. Because this is going to sit there and say you're going to get all, it'll tell you the holdings here. Like, look at the holdings. When you're a jet all the way. So it's got Delta, Southwest, United, American, JetBlue, Allegiant, Air Canada, SkyWest, Alaska, Cargo Jet, Air China. It has things in here that have nothing to do, that are like cargo people. So this is a good way to get a feel for the industry. Now, does that mean you should just buy it willy-nilly? No, but when things get hit really hard very quickly, that's a play that I like a lot. I like this idea. You know, Mo and I talk about our future strategy of investing. And we want to pick a certain system we're going to do and stick with 80% of our money in it. But the other 20%, we want to do things like this, where we find a specific industry or company that's been hit hard because of some fluke information and figure out, is it really going away? And I don't think airlines are going away. Now, are some of these airlines going to go away? Probably. Sure. I don't know, but I look at it saying, wasn't Boeing on here before? Why is Boeing not on here anymore?
Do you ever fly Spirit?
I have flown Spirit.
What do you? Isn't it just laughable? Like,
I'm
always worried. Like, how is this?
And Spirit are
how is this plane in the air? I mean, the seats are held together by styrofoam, and
oh, I've never sat next to somebody who didn't smell on Spirit. It was pretty bad. It's been pretty bad.
You always smell nice.
Do I?
And you know, I layer on the musk.
I think you smell
severely.
Nice. Listen, I have no problem flying. The problem with Spirit and Frontier is you go buy a ticket and then you have every single add-on to it. So you buy a ticket for like $130 and you end up checking out at $220. You're like, how did this happen? Like, I might as well just pay $20 more and gotten American Air, which I love. I love Delta. Delta's my favorite to fly.
You're Delta. I'm United.
United's very convenient out of Cleveland, but their customer service has gotten pretty bad lately.
So go back to Southwest. I cut you off.
That's okay. I like Southwest still. Do I think Southwest? When we did the video first,
yeah,
I think I did it and I said I bought it $25. It's at $37 now. I still think that when everything recovers, it's a $50 or $60 stock. So there's not as much juice on the squeeze or whatever, squeeze on the juice as there was before. But don't get afraid if this keeps falling down. You know, Mo is he reached charts. And at 41, Mo timed it perfectly. I think he sold it like $41 recently because he was like, listen, it's not breaking this 200-day moving average. I'm getting out. I don't do that. I'm sitting there saying, listen, I like the company. I don't mind writing it down to 30 or 25 and I'll buy more of it.
You want to talk about it?
What's that? Love?
Yeah.
Nothing's changed from the last video. Go watch the last video.
No, people are asking right now. They're watching right now, Paul.
Let's see how it's going.
We're going to go back to PE?
Well, let's go to the trailing 12 months.
Okay.
By quarter. Oh, sorry, not trailing 12 months, quarterly. Let's go quarterly. Woof.
Oh, boy.
Woof.
Highlight those.
Quarter of this year. They lost $900 million in the second quarter. It's tough. But that's the thing about Love. The reason the analysis on the pillars don't really work as well is because it's a fluke incident. The question you have to ask yourself is, will this company get back to normal? I actually think they're going to gain market share. I don't have a reason to believe it other than they're a top quality company, stayed in business, stayed pretty full. In tough times, those companies tend to do better.
Mm-hmm.
They manage their costs very, very well. This will be the first year they ever had a loss. Yeah, this will be the first year they ever had a loss.
Wow.
Let's look at their free cash flow recently.
Go on.
Let's go to their free cash flow in the last quarter. Because, remember one thing. The thing about airline industry is they only book the revenue when the trip actually occurs.
Mm-hmm.
They actually had free cash flow this quarter, guys. Look at that. Look at that. Look at that. Would you look at that? Previous quarter, the first quarter of the year, they lost $600 million in free cash flow.
Mm-hmm.
This quarter, they had $785 million in free cash flow. Wow.
Look at that.
They had free cash flow last quarter, guys.
Wow.
That's why the profit and cash flow, that means, to me, it's just showing that the future quarter is going to be much more profitable because the free cash flow is up. And once you have to earn that revenue up, it'll jump up higher.
A couple of people asking about Neo. What is that?
What is Neo? I've never even heard of Neo.
Don, what is that? NIO?
So Neo is a much more than a car company.
that Nikola?
Neo designs and develops smart, high-performance electric vehicles
Ooh.
with an aim to be the first. And I didn't click the link, but that's why I searched up.
Well, let's buy now, Paul, if they're doing electric vehicles.
Oh, my Lord. Is this Neo? Is this the right one?
Yes.
$23 billion value, guys. So exactly like
Don't overreact now. You about to go off the chain. I see it.
not going off the chain. It's
He's
not
gonna
like
start
the,
cursing
not like the
and
Tesla chain.
cursing and bringing in religion and
Everybody
politics.
everybody loved the
Yeah, your rant.
Oh, they actually have revenue. That's interesting.
All right, go back, Paul. Let's talk about it.
Okay, let's go back.
Pillar number 1 for NIO. Neo. I don't know anything about this, but I should.
PE
PE less than 20.
doesn't exist
Why is that, Paul?
because they don't make money.
Oh boy, it's tough. Okay.
Next,
Okay, profit margin on the money.
negative 33%. Why? Because they don't make money. And their gross margin is 8%. Their gross margin is lower than we want the bottom line profit to be.
Uh-oh. Okay, that sucks. How about
Okay, so wait a second. I want to make sure.
big X's?
Big X, guys.
Okay.
Look at that.
Oh boy. Okay. Okay.
Next.
Revenue growth over the
They're
past
probably going to have that.
5 days. Let's look at days. Maybe they've sold a couple hamburgers or
Oh, we don't even have revenue numbers. Guys, we don't even have any revenue numbers here. We have last 2 years. I mean, it's big growth in the last 2 years.
yeah.
Yep.
Okay.
Profit.
Profit.
2016, they lost 390 million. 2017, they lost 740 million. 2018, they lost $1.4 billion. 2019, they lost $1.65 billion. They are losing more money every single year. Again,
Oh boy.
this is a speculative play, guys. This is not a play for me.
Okay.
Do we even need to go further?
I don't. Shares outstanding, Ball.
Shares outstanding. 848, 848. What? Yeah, they have more shares outstanding. It's garbage. Next.
That's it.
I mean, there's no data on this thing.
So-
Guys, you got to remember, my view on this stuff isn't what you got. If you want to go put a little bit of your money towards this and have fun, go for it. But if you're expecting to find the next Tesla, which I think everybody wants to do,
Yes.
I don't know.
They tried with Nicola, right?
Oh, yeah, and then their fraud just went through. Can you find out how much where Nicole's stock is right now, Don? Okay, next.
Yeah. A lot of people are saying NAO don't touch unless you want to gamble, playing roulette. Yes, I hear it. Someone's asking, Paul, give your take on the banks. I know a lot of people are attracted to banks because they make a ton of money, and you stay away from them, right?
So here's the thing about banks. Okay, wait, go ahead, Don.
Nikola is at $28.60.
It was at 40 just 2 days ago.
I believe you are correct.
So their founder, I don't understand what their founder was arrested.
Oh yes. Sorry, Paul. I was trying to tell you we have 30 people watching. It's wonderful.
Okay, gotcha.
And make sure you guys are smashing that like button. People are asking about. Oh, I love some of these people.
Wait a second. You asked us about banks. The reason I don't do banks
Right.
is
Sorry. Go ahead.
I'm actually still trying to learn how to understand banks. Their financial statements are totally different. Their financial statements on our pillars would be insane. We'd have like 8 pillars on all of them. And I remember thinking to myself, okay, I'm missing something here. If every single bank qualifies for my 8 pillars, I have to be missing something. And sure enough, I reached out to people and they're like, yeah, you can't look at banks that way. It's got to be done a different way, blah, blah, blah. So I was like, shit. So I'm still learning about banks. So I avoid banks. I don't understand them. The second I understand them and learn them,
You'll let me know?
I'll let everybody know.
I have a pillar in my pants because you're about to do eBay stock. People are asking about eBay, Fleabay.
eBay is actually pretty good.
Now, I jumped on eBay in the year 2000. I started selling stupid shit in my college dorm.
What'd you sell?
I just
magic cards?
Well, magic cards and old vintage beer signs and so I've had 1,000 transactions on eBay, Paul.
I have a feeling I'm gonna like eBay. Oh. By the way, can I make a comment here?
Time out for Paul.
We did a video today on Verizon. We did a video today on Intel. And I think I'm gonna be buying Verizon and Intel stock. This is my point. I'm not doing, when we do this, the reason I do this is I want people to ask me questions on companies so that I can get ideas for companies. I don't know why. We always looked at Intel, and Intel just dropped from like 60 something to 50. And that's why Mo earlier this morning was texting me, he goes, hey, listen, we might want to look at Intel. It's dropped a lot. So anyways, eBay, first pillar.
PE ratio, minus 20, less than 20.
7.5.
Wow. I mean, so again, I'm the idiot that looks at the graph and says, wow, this is low, Paul. This is lower. What is the time frame of this? Just this
3
year?
months.
Oh, okay. Show me all time. Let's see what we're looking at.
All time.
Oh, it's at an all-time high, Paul. Of course it is, right? People are staying home and buying off eBay.
Yeah, but it's only 7.5 times earnings right now.
eBay's the bomb, right?
Oh,
I mean,
eBay's great.
How has there not been a competitor?
Cars off eBay. Have you bought a car before? I bought cars off eBay.
Really?
Yeah.
Oh no, I just buy.
I bought a car in 2007 off eBay. That's early.
I just buy high-end magic cards.
Of course you do.
So it's at an all-time high, Paul. I would imagine you don't need to look much further.
Don't care.
Oh, okay. PE ratio.
Why would I care what this is? I don't care about this.
Because I know you, and if people are talking about it, it's probably a no for you.
Well, let's go. 7.5 times earning. What's the next one?
Profit margin, pillar number 2. I don't know why I said that way. It was kind of weird, but profit margin is
26%.
Oh my goodness.
Their gross margin, almost 80.
They're slaying it.
They're slaying it. It's internet stuff. Of course, it's gonna have a high margin. This is great. Their their bottom line profit margin is 26%. That's incredible.
Pillar number 3 is revenue growth over the last 5 years.
Okay, so we're gonna go to the financial statement. We're gonna go to the income statement. We're gonna go look at annual. Annual. 8.6, 9.3, 9.9, 10.75, 10.8. So it is growth.
Yes.
We remember it is the biggest leader in online auctions right now, right?
Only? Who else is there? They have these bid sites that are weird. You don't get involved in this. It's free.
I tried it one time. It was like Quibids or something like that.
They're like oh, you can win this computer for $6, and then it takes you $300 to buy bids.
$3,000 to buy the bids.
Right. Gotcha.
So this is decent revenue growth. It's not great, but it's decent. It's there.
Profit growth?
Profit growth, kids.
Pillar number 4.
Now this is a little weird. 1.7, 7.3, lost $1 billion, 2.5, 1.8.
Lost $1 billion.
This is very like this is the graph of their profit growth. Like, ready? It's this.
What happened that year?
I don't know. That's a great question. That's a great question, Seth. We got to figure that out.
Okay.
There was something here. They probably sold something. We'll figure it out right here. Income from continuing operations. From something happened right there. There was a big number.
I'm sure Don will look it up for us. How about pillar number?
So, by the way, really quick.
Go on.
This is an X. Even though the profit's up, it's still too weird. It's too over the board, across the board. I don't really like this very much. Doesn't mean it's a bad thing.
Oh, okay. Shares outstanding. We want them to be decreasing, of course.
1.3, 1.3, 1.3, 1.3, 1.25, 1.2, 1.13, 1.06, 980, 849.
You gotta like that.
I love it.
How about total current assets greater than total current liabilities?
I'm willing to bet this is very good.
Why is that? Software?
Because it's internet based. I mean, what are they going to have? They're not going to have
overhead? I think it's like 5 guys in a dorm room. It's their operations.
7.4 billion in current assets. Wow. 4.7 billion in current liabilities. Over $3 billion left.
Now, I would say, as the years have progressed, eBay keeps taking more and more money from everyone.
Are they really?
They started charging tax. I mean,
well, they don't charge the tax.
Right, but that wasn't always there.
That's because the law stated. You can't blame them for that.
That's true, but I mean, it still sucks. And so I get the tax and the fees. Like,
I thought you liked taxes.
We're gonna go there. Yeah. So like now, like I guess I'm too used to 20 years. I'm used to 20.
Amazon collects tax now. That didn't happen 5
You're
6
right.
years ago.
I'm too used to seeing that price be like, boom, I just won this auction. Yes, and then it's like $20 more. And I'm like, shit.
Yeah.
So Yes. Great.
So anyhow, this is a check.
What about free cash flow growth?
All right, so free cash flow, we go to our cash flow statement.
Cash from operations
We go to our annual.
minus capital expenditures.
That is correct. And I imagine this is going to be pretty good too. So 3.4, 2.2, 2.5, 2, and 2.6. So pretty stable. I mean, it's down a little bit.
Not growth, though.
Not growth. Yeah, it's not growth. It's just a very stable, but the revenue hasn't gone up a lot. So it's kind of like, okay, understood. So yeah, it's not growth, but it's just stable.
Someone said Thirsty Program said they're moving away from PayPal. Is this true, guys?
eBay was actually started. PayPal was started by the guys who started eBay. Elon Musk was involved in this.
Yes.
PayPal was started by Peter Thiel and Elon. They're moving away from PayPal, really?
And that's what someone said. Maybe we don't have it
Wow.
right. A couple people are actually saying it. Maybe. Okay. What about price to free cash flow?
So you
less
remember
than
the price
15?
of what was the market cap of
I don't recall.
eBay? 35 billion. So now the free cash flow last year was, let's go to the trailing 12 months actually. Let's go to the trailing 12 months. Free cash flow. Basically 2.9 billion. So 35 divided by 2.9 equals 12. Yeah, 12.
Mhm.
So check mark.
Yeah. Someone's saying Leon said eBay spun off PayPal in 2017.
Yeah, a long time ago.
Oh, okay.
But they were part of the same company. Like it was always PayPal and eBay.
So in the end, what do you think about eBay?
I'm actually not opposed to eBay. If you believe that eBay is the leader, and I think it's selling for low multiples, low multiple of cash flow, low multiple of profit, I think you have to understand why their profit's so up and down.
Yeah.
And that takes some more research, but they're decreasing shares. They have steady free cash flow. They're going to have a good percentage of their operating cash flow going to free cash flow. I like it.
Yeah, I mean, eBay, I just feel like it's been such a fun part of my life has been spent on eBay, getting rad things, selling rad things.
Remember, that's not all we care about, but you're right.
I know.
At least you like it, though.
Paul, if I told you what I had selling on eBay right now, it's so laughable.
How much do you have selling on eBay right now?
Oh, I have magic cards at $4,000, magic sets.
How much do you have listed on eBay right now?
Should I brag? I have a few magic collections, like 20 grand worth. And dude, I bought a vintage light up nativity scene with my son for $60. I have it on eBay right now for $500.
How's it going?
I bought that mitt. I tell you about that old school mitt. I went to a yard sale and found these mitts from the 40s. Bought them for $3. They're on for $300. I love this stuff, man.
It's fun.
That's my little side hustle.
Imagine if you did that like 4 or 5 times a month and made $300 each time.
Yeah, it's interesting.
It is interesting.
I love eBay.
So anyways, eBay, I'm not opposed. In fact, and they pay a dividend, 1.28%, nothing huge, but it's there. This is their chart, 1-year chart. They got as low as 20.
Vinny said, "Is that a white belt, bro?"
It is a white belt. What is this? To make fun of Paul's outfits podcast?
Donna, you see this
I'm
belt?
also wearing a blue
Listen, guys, Paul's very humble. That is a baby sealskin belt. Okay.
It's a Nike golf belt.
Someone clubbed the baby seal and made this belt.
Actually, I don't think it's even Nike. It's sort of some cheapo brand.
So listen, we could be on this live stream all day because people are asking about tons of companies. I mean, do you want to just keep going or you want to go?
No, I don't think. Listen, it's we got like 5-6
53 minutes. I mean, people are asking about a lot of different companies.
This is why I like this, though. We want to pick these companies out. Nobody's asking about real estate. Why is nobody asking about real estate?
I know. They're asking about your watch. What is that watch?
Oh, it's Glassute.
I don't know what that is. It's okay.
Listen, it's so funny. Like you know, I'm a watch snob, right, Seth?
Of
so,
course.
guys, I have a watch collection. I love watches. I will literally not buy any clothes unless they're on sale. But watches, I just spend way too much money on.
Video Reach Media. He's over in England. He says when you come over there, he wants to take you golfing.
Oh, I was just in England in August. I just lived in England. Did you know I lived in England?
Are we going to France together, by the way?
We're doing something.
Beth gave me the okay, so if you want to go, maybe I shouldn't bring that up, Paul.
You probably shouldn't bring that up.
We'll talk about that later. Okay, guys, listen, guys and gals, whoever's watching, I think majority.
Did everybody like this? Did everybody like the video?
There's a lot of likes.
How many likes do we have?
There's 17 likes. You guys are
Oh,
great.
we can do better than
Right.
that, kids.
Please like the video for Paul. Dear God, look at
Literally,
him.
my self-worth every night is I go like look at the likes we had that day and go, okay, we had enough. I feel good about myself now.
Do you want to?
Joke.
Have you guys bought any real estate recently? John, our super OG fan, is asking. We've looked at some deals.
We've made offers. I've made a few full price offers.
Really?
Big property. Yeah, I made an offer on a big property in North Carolina. The reason I ended up bailing the deal was they had a loan in place that had to be assumed, and it really hurt the returns on the property.
Okay,
It was a great deal.
Why don't we do we can do a whole real estate live stream for our real estate people, and we'll put out some promos for that. Don will get us early on talking about real estate. Okay, guys. Oh, and other people are saying I can't like the video twice, but live streams can be tough to rank on search engines. So
I know, but it helps my ego, guys.
okay. Well, guys, that's a great wrap.
All right.
That was exciting. That 53 minutes just flew by.
I know. I was gonna say. I was like, shit. What time?
55 minutes. It's incredible. Thanks, guys, for all the viewers out there. It's been incredible. New subscribers, thank you so much. PG Paul Gabriel is replying.
When I write PG, that is me
in the comments. And so if you have questions on real estate investments, Paul is also available for sort of a mentorship hire if you're interested in that. And
it's very expensive.
That's true. That's true. Not for me, because I'm the host of Everything
Well,
Money.
yeah, exactly.
PG
all right, guys. Thanks very much.
PG ticker symbol, someone said.
PG
Thanks,
ticker
guys. Everything Money. Subscribe.
Procter &
Appreciate it.
Gamble.
See you guys. Thanks, Don. You want to cut it, baby? Yeah. Thanks, guys. Thanks for watching.